Hey everybody, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and analysis. Today, I wanted to share with you guys three different investing strategies. So we have the growth strategy, we have value, and we have income. There is a fourth called safety, that is typically bonds, but we are going to ixnay that because I don't believe anybody should be in bonds. And if you wanted to, you can do research about those on the side. Major brokerages like Vanguard, Charles Schwab, Fidelity, TD Ameritrade do offer those type of investments. They do normally yield a very low return over a period of 1, 2, 3, 4, 5, 10 years. So I don't really fully recommend. But today I'm going to show you guys how to create a scanner for each of those risk tolerance fields and investment styles. Again, that's growth, value, and income. Let's get into it. I'm going to put on my glasses and I'm going to shorten myself to make it easier. Oh, yeah, totally. If you haven't liked or subscribed my video, please do so. It helps me out tremendously. I am a starving artist. And if you guys like my videos, it tells YouTube that maybe I'm doing something relevant and other people can use this content to make some money. So please do so. Helps a lot. But let's go ahead and jump right in. I'm gonna go ahead and Whoops, wrong screen. I'm gonna go ahead and minimize myself. And so we're gonna create three screens. I'm gonna go ahead, whoops. I'm gonna move myself a little bit more. I can just do this. All right. Um, there's a bad glare on those glasses. I'm sorry. Okay, so looking at Finviz, we're gonna go to all. Let's start with our growth scan. So for growth, we want quality stocks, number one for everything. But we also want to look at different market caps. This is going to give us companies that are on the smaller growth side. So we have small under 2 billion. We have quick ratio. I like 1, but companies that are at 0.5 or above are okay. I if they have over 1, that means they can pay their debts if they had to shut up shop tomorrow. Um, so these growth companies, they might not have the cash right now, but every big behemoth, Amazon, Netflix, PayPal, Facebook, Twitter, started out as a growth company. So don't exclude them from the group. We want institutional transactions to be positive. We also want the EPS growth next year to be positive. Maybe. I forgot Finviz doesn't like me when I'm recording, so I'm just gonna hide myself. But I'm still here. Okay, and now we want the price to be under $10. We also want the gross margin. I typically love 30, but we want over. Let's do over 25. That's not bad. All right. We want EPS growth this year to be positive. All right. So I believe I have hit all of the points. Oh, we want average volume to be somewhat consistent for liquidity purposes. So now we are left with 72 stocks out of about 8,000. So congrats, that's big. So we are gonna save screen, and we're gonna log in. And this screen is gonna be called growth growth scanner. And we're gonna save that. All right, now let's reset all these bad boys. And now we are going to go to value. So value, we do not want to discriminate by exchange. So we want large, under $200 billion. We also want a quick ratio over 1. We want companies that are solid here, over 1. We want positive institutional transactions. I will save the kicker for you guys at the end, but let's do average volume of 500K, over 500K. We want EPS growth this year to be positive, and we want EPS growth next year to be 5%, at least over 5%. All right, and can you guys point me to any direction on here that would show me where a stock could be undervalued? I will give you a second. I'll give you a hint. It's not the PE, it's not the forward PE, and it's not the PEG, and it's not the price to sales. It's not the price to book. It's not the price to free cash flow. It is target price. So we want to be above. All right, so we have all of this saved. So let's save it really quick and I will show you exactly what I mean. Value scanner. So value scanner is for those who are looking for something a little bit safer than small cap growth and a little bit more volatile than you know, your super safe stuff. Um, so what I mean here, let's just open a few of these stocks. I don't know which ones they are. Okay, so I opened Airbnb. The price is currently $170, but the target price is 198.76. So that means analysts, people who are professionals who get paid to do this, have this valued at 198 based off of earnings per share this year, next year, growth projections, things like that. So, I mean, this looks good. Airbnb looks really solid. I like this a lot. Um, so that's one. AD&T, Adient. It's in Ireland, auto parts. Wow, earnings per share this year is 298%. That's crazy. Analysts have it at $50. Right now it's 33. That sounds like a deal to me. And if you look here, no really viable pattern, other than it looks like it went down, up. It's once it starts rounding the bottom, I think it'll be ready for a nut move. All right, and wow, $1,000 stock, but analysts have it at 1,600. That is crazy. 60% value right there. This looks, ooh, look at that nice monthly candle. Bounced right off of support down here twice. That's a double bottom. That is beautiful. So these are examples of value I highly recommend for those who are trying to play a little bit safe. And if I were to be looking at this, if I wanted to find something maybe that could be worth or could climb in value, I want to look at shares outstanding under 100 million. Now, these are the ones that can really move. Yeah, so let's just open this one and a random one. I guess this one is random. So looking at volatility for a large cap, it went from 650 to 33, now down to 11, all within 5 years. That's crazy. This company looks good too, by the way. Yeah, no real judgment here. I hope I have this one. I probably do. All right, and the last one we're going to look at is income. This is for people who are in the later stages of their beautiful life where they want something safe and they want something that's going to pay them money every quarter. So I have growth and value. Let's do income. So we want a dividend yield over 4%. That's like the mid-range safe point for me. We want long-term debt under one. Under one. We want EPS growth this year over 5% because we want to get paid. We want to make sure our money is getting us at least 5%. And next year we want over 5%. And there's one more data point here that I don't really want to give away to you guys yet. I want to see if you can get it. What is another field that we can select that ensures that this company has been good over the past 5 years? I'll give you a second while I drink some water. You're correct. EPS growth past 5 years. So we want over 5%. So let's take a look at Alliance Bernstein and let's take a look at Citizens in Northern. So what do I mean? This is on the safer scale. So let's look at, I guess, back to 2012. If you would have bought this 2012, April 2020, 2011, sorry, April 2011, you would have bought it for $22 then, and you would have hit $22 in 2020, and now you would have doubled your money. So, and each month it's 8%. That's crazy. That's awesome. So your money has been relatively stable over the past, let's say, 9 years, and then it doubled, which was kind of cool. Um, so this is one of the safer scanners to get income. Because not only are the value of the stocks gonna be safe, but you're also gonna get annual return of 8% for Alliance Bernstein. And let's look at this bad boy. 2012, let's say if you would have bought April 2011, today you would have bought that at 17, and today it's at 24. You can see it has been relatively safe minus the health crisis. But I mean, even then, you have a consistent, stable money. There's no volatility. You're not having a heart attack. And for each year, you're earning 5%, which is great. So, um, again, safe, effective. You cannot go wrong. If you have $20 million and you have 5% income, you're making $1,000 a day after taxes. So I think that's living good, if you ask me. So yeah, that's what I wanted to show you guys. This is a nice, short, simple, sweet video. I know it hasn't been that way for the past few videos. But this is a great video for those who are trying to set up their own scans and want to have those three different options. I highly implore you to add these to your arsenal and use them and start saving them on a spreadsheet and charting them out on Thinkorswim or the Webull desktop app, whatever you prefer, or TradingView, whatever you want. But that's all from me. I hope you guys are doing well, and I can't wait to talk to you guys next time. Have a great day or night. Bye.